Hello everyone. To start with, I would like to congratulate you for planning to pursue CFP and thank you all for joining us for this demo session for CFP Learning by Corporate Connect. My name is Sapna Tiwari and I am the Manager Academic for Corporate Connect. I am a CFP certificant myself and am holding 5 years of work experience in the field of banking and finance. I've trained more than 100 professionals for CFP certification. As we all might know, Certified Financial Planning is the highest level of accreditation in the field of financial planning. This certification is acclaimed and recognized in more than 23 countries across the world. Once certified, your employment opportunities increase with banks, wealth management companies, and other financial organizations. This session will be focused on providing you an insight on how Corporate Connect creates the most interactive learning experience for your CFP examination, and that too at the comfort of your home. Now, I would like to take you through one of the most important concepts of your CFP certification program, which is time value of money. During the session, if you have any doubts, you can indicate by raising your hand by clicking on this icon. Okay? Time value of money. What is time value of money? Let's say you have two options. One, receive rupees 10,000 today, and two, receive rupees 10,000 after 5 years. Answer to this is very simple. Obviously, receive rupees 10,000 today, because you already recognize that there is time value of money. If you receive rupees 10,000 today and invest it even in a saving bank account, which is considered to be the safest option to keep it, or the other way is to use rupees 10,000 today to buy something or some services, right? In that case also you will have to you will be able to utilize this rupees 10,000 in a better way, right? This is so time has a value for money. This is why this concept is referred as time value of money. Money received sooner rather than later allows one to use the funds for investment or consumption purposes. This concept is referred to as time value of money. Time allows an individual an opportunity to postpone consumption and earn interest. Now, why I said that this concept is very important for you as a financial planner, because as a CFP, when you will be preparing financial plans for your client, you will have to help your client measure his financial goals at different points in time. A goal which requires rupees 10 lakh today will require a much higher amount after 10 or 15 years, right? So you will have to, as a financial planner, you will have to be very well versed with all the calculations included under this concept. Let's see which calculations are these. How to calculate future value. How to calculate present value. What is the present value of your money? What is the rate of return you need to earn on your money? How much time, what is the time period for how long you need to remain invested? And what is compounding? Let's start with future value. What is future value? Future value is value of your money or an asset after a specified date in future. After a specified years. If you invest rupees 1,000 rupees, which is the present value of your money today. After 5 years, with simple annual interest of 10%, your money will grow by 10% every year. If the interest is simple interest, after 5 years, you will have rupees 1,500, which is the future value of your money. After 5 years, value of your money. This is future value. Now let's see how to calculate. This was simple interest. When it comes to compounding, we will have to use a formula to calculate future value of your money, right? Let's see the formula. This is future value equals to present value. PV stands for present value here. The value of your money today. 1 plus R raised to power N. Now here R stands for rate of return. What is the rate of return which you are earning on here? I can see your query. Explain the concept of time once again. Fine. Let's have a look. PV, if you want to increase the future value, you will have to increase the present value, right? Present value is the amount which you invest today. Present value of your money. R stands for rate of return. The higher rate of return you are earning on your investment, the higher your future value will be. Okay. Now N, number of compounding periods. How much time you allow your money to grow. It's the time, not the timing, which makes an impact on the future value, right? If you invested for 2 years, right? Or if you invested for 20 years, the future value would be much higher. The more you keep it invested, the more it will be. Okay, clear? Fine. Let's see now the practical implication of future value. How, as a financial planner, you will use the concept of future value. Let's say you have a client, Nitin Kapoor. He is planning to buy a showroom in a mall after 5 years. At present, the cost is estimated to be rupees 2 crores. Now, after 5 years, if he is planning to buy, he will require a higher amount because the prices, they grow by 4% every year. So, as a financial planner, as his financial planner, you will have to help him calculate how much money he will require after 5 years to buy the showroom, right? So, here we will use the formula of future value, which we just had a look at. This is the formula. Now, here in this example, present value would be rupees 2 crores, which is the cost of the mall today. R is the price hike percentage, which is 4%, and we have to calculate the value after 5 years. So, N in this example would be 5. Let's put the values in the formula. 2, 1 plus 4% raised to power 5. The result we would get is rupees 2.43 crores. So, if Nitin Kapoor is planning to buy the mall after 5 years, he will have to plan for to accumulate rupees 2.43 crores, not rupees 2 crores. If he saves rupees 2 crores only, his goal will not be met. Same way, if you are planning for your client's retirement or his client's education, which is, let's say, after 10 or 15 years, and the client is planning for the present value, he will not be able to accumulate the sufficient amount, right? Now, this was the demo session. We just wanted to show you how this interactive learning works. If you have any further queries, you can contact or you can send us your inquiries. We would be happy to respond. The email is csp@corpconnect.in, or you can ring us at 47685685. Thank you everyone for attending the session. Wish you a very happy learning.